We want to thank you for being here. We recognize the commitment that you're taking to pursue excellence. You're just one step closer to achieving success. And the Institute is here to help at every step, wherever you are in your business journey. We've helped thousands of shops over decades and across the nation, from service advisor and manager training to a shop that's just starting out, or even those who are planning their growth, scaling from 10 to 20 to 30 locations. Those that are preparing for private equity sale, or even those that are succeeding their business to the next generation. The Institute and our many coaches with years of experience, both from inside and outside the industry, are here to provide education and tools to get you on your way. You do not have to do this alone. We hope you enjoy the content to come. For a better business, a better life, and a better industry, the Institute.
Good morning, good evening, good afternoon, or good night, depending on when and where you're joining us from today. It is a beautiful day outside. Glad we are here together. Those of you watching the recording, hit that like button, hit the share button. Make sure that you are a part of the Institute and all the awesomeness that's happening over here as we continue to lock arms with you and elevate this industry. We don't want to leave anybody behind, especially not you. So let's work together to make this awesome and amazing. In our webinar today, we are going to have a phenomenal discussion. And I say discussion because I want you to participate. We are live streaming on YouTube, on Facebook, and on StreamYard. So if you are here with us today, find that comment button and put in there where it is you're joining us from today. Love to give you a shout out and say hello and recognize you for being here for this live event as we're talking today in our webinar. So in the comments section, go ahead and share with us where you are joining from today. Bobby joining in from Florida, Bobby Lambert. Bobby, thank you. Welcome. Glad you're here with us. We just got your advisor or manager signed up in the program. That's phenomenal. Thank you very much. Super excited for that. Chris Adams, Spectra Auto, Frederick, Maryland. Oh, very cool, Chris. Glad you're here. Thank you. Crystal Taylor, Easy Auto from Alaska. How about that? Alaska's in the house. We got the two extremes, Florida and Alaska, both in here. Oh, that's awesome. Thank you, Crystal, for being here. Shout out to those of you who are putting your locations where you're joining us from in the comments. Love to know where you're joining us from. So thank you for being here. And those of you watching the recording, we do webinars every Wednesday, 10 a.m. Pacific, 1 p.m. Eastern, every Wednesday. There's knowledge, information, insight to help you into the information you need, the inspiration you need. And now we turn it to you. It goes into the implementation that you will do inside of your shop to make things awesome, amazing, take it up to that next level. Last and final shout out to Shayla Costa. Does that mean Daniel's there with you too, Shayla? San Francisco, Marvin County, California. Oh, Marin County. Small print. Is Daniel there with you? Good to have you with us. Glad we are here today. And I am excited to welcome today. And Shayla says, yes, Daniel's there. Thank you. Welcome today, Eric Jorn from Kaizen CPA. Eric is a CPA. He is an awesome member of the industry, an awesome member of the family, one of the certified vendors with the Institute for Automotive Business Excellence. So to you, Eric, good morning, good afternoon. Thank you for joining us. Glad you are here today.
Hey, good. It's good afternoon for me, and I think it might be good morning for you. And it feels like a normal Wednesday seeing somebody from Alaska and Florida in the same day. I don't know if you can get more polar opposites.
I love it. I love it. And you talk about traveling halfway across the world. I think of like Cindy Reason and Mike Samard and them traveling from Alaska all the way to Florida for the summit. Yeah. You were at our summit conference. That was awesome, wasn't it?
Absolutely. It was a really great time. Beautiful resort. I'm looking forward to that again in 2027.
Yes, 27. I had to do quick math there because we go off years of STX. So we're the odd years, they're the even years. Yes, STX, even years. So in 26, STX will be in Washington, D.C.
Looking forward to it. We should see you all there too.
Yeah, everybody needs to be there. So we haven't decided a location for Summit yet, nor have we decided a date, but we have a pretty broad wide field of options that we are looking into. So we're quite excited. Once that announcement happens, you'll probably hear it here first.
Awesome. We're very excited.
Yeah, yes, Eric. So I've been working with my CPA. Taxes came around. We all had to do our personal taxes. We had to do our corporate taxes, which we're due in March, and our personal due in April. There's a lot of fear, trepidation, anxiety about coming and talking to somebody like yourself, a CPA who's, you've gone to school for a long time. You've got all the certifications. There might be some things about my business I don't want to share, or I'm scared to share, or embarrassed to share. Is there any sort of a guideline or anything that you provide to your clients that might be helping them on this journey of not being afraid to come and talk to a CPA?
Yeah, yeah. So, I mean, number one, right? Let's get past the fear of the sins of the past, right? Maybe something's a mess. At the end of the day, we're happy turning somebody into a better taxpayer. That's number one for us. If we can turn you into a better taxpayer, more compliant, get you on the straight and narrow, that's a win in our book. We're not going to judge you for something that's happened in the past. And we understand the reality of running a small business, right? We're busy every single day. One of the best things that happened to me is becoming a partner in the firm, so I can understand all the aspects of the day-to-day operations of a business and how demanding that is and how easy it is to get off track, deal with whatever you have to deal with. So when we start working with small businesses, our goal is to take the burden of all these obligations when it comes to generating a monthly financial statement, paying your sales tax, running payroll, even filing your tax return and gathering all those documents. And we want to take as much of that burden off your plate by creating great systems and processes to really make that not a interruption into your day-to-day of running your business.
Yeah, that's so true. That helps. It reminds me of those TikToks you hear where you see them and they're like, we listen and we don't judge. We listen and we don't judge. And so that's a lot of your position is listening to where they are, talking to them about what they can do to be in a better position for upcoming years. So when you bring on a new client, do you do a 3-year review with them, or do you just start fresh from today?
Yeah. So all depending on the client's particular situation. So we all start with what we call a discovery call, even before you become a client, to really kind of set the stage of where you're at. Maybe you're unsure about how things were done in the past. We usually ask for 3 years of tax returns, if you're able to provide it, only because that gives us a little bit of an insight of your journey. And if we think there's things that we can go back and fix, great. If not, we'll start from either the last filed tax return or, wherever we even sit today. And then depending on the quality of your books, and where you kind of left off, we might make a decision of, hey, we need to start fresh, or, hey, we're going to go fix what has happened in the past and kind of bring you along up to current. One of the best things that's happened, though, is we've moved into this digital environment where, you don't even have to drive over to your accountant's office and drop off paperwork. And even paperwork is becoming a thing of the past. We're just getting online access to everything we can. So you don't have to carry the burden of, I got to go make sure I have all 12 of my bank statements for the year, my credit card statements. Here's my box of receipts. Here's my printed out repair orders. It's a
So you
whole
don't get shoe boxes of receipts anymore?
Oh, no.
Those days are long gone?
Well, I shouldn't say long gone, because we come across shops that don't even use shop management systems at this point still, which is
No way. Wow.
I think there's things that they're trying to accomplish by not having it, but yeah, I
Wow.
mean, we still see everything under the sun, but especially when we're working with shops that work with associations like the Institute. I mean, they're already leg up ahead of what we see just out in the wild on a
Yeah.
regular recurring basis.
Yeah, there's a lot of point of sale systems that we work with, and it's interesting to hear their numbers when they say, anywhere from 30 to 50% of our new customers coming in that are adopting our SaaS,
Yeah.
30 to 50% are coming from paper and pen or QuickBooks. So they're not using a point of sale system, which really does help them to optimize that the markups, the parts lookup, the matrix. It really does help with that. Many shops aren't doing that. They're still pen and paper, or they have a QuickBooks or Quicken or something like that. So yeah,
Absolutely.
I'm excited to hear that you meet the shop where they are.
Yep.
You're there to meet them where they are. You don't judge. Here's the situation. Here's the facts. Here's the numbers. Here's the truth.
Absolutely.
And here's what we can do moving forward. We've got a couple of things we need to take care of, and we're moving forward. And here we go. That's wonderful. I hope that everyone, all my friends and family and everybody that's listening to this, and by the way, Dad, no more shoebox with receipts, okay? You heard it here from Eric. He doesn't want it anymore.
My dad still tries to bring me his stuff in a plastic baggie, and I finally got online access to get everything.
Oh my gosh. So your dad and my dad, same cloth.
Mm-hmm.
And yeah, so Dad, no more shoe boxes. So here we are. And thank you. I feel just even this conversation with you right now, the anxieties just dropped so much in being able to talk to you. I think you are amazing. I think you do a phenomenal job in the automotive industry, especially working with my friends and my family. And I consider the automotive industry my family. I know you're not working with my family, but you are working with my family.
Absolutely.
In the greater whole. So you've got information we want to share and talk about here today. Eric, the time is yours. I'll interrupt you with questions, comments, concerns as we have those questions coming in from our audience for the live. We'll ask those questions. Go ahead and put those in the comments. If you've got questions for Eric, anything CPA, anything accounting wise, let's ask those questions of Eric. And as we go along, Eric, I've got a pretty curious mind. So you're probably going to say some things that just trigger a wild hair.
Absolutely. I'm looking forward to it. And please, from the crowd, any questions that you have specifically is only going to help not just you learn and probably solve an issue, but it will help everybody else. We learn better from example, and you can listen to me talk and ramble straight through this whole thing. But if you bring your actual real life situations and we solve them today on this call, that's going to be a win for everybody involved.
Love it. Let's do it. Let's solve the world's problems right here. And anybody here live will be able to cure all ills.
It'll be a successful lunch hour for me if we do that.
Yeah. Oh, absolutely. Absolutely. Oh, one more shout out to Andrew Knutson joining us from Long Island. Andrew and his wife are having a baby in about 50 days, a little girl.
Oh, congrats.
His first. Congratulations, Andrew.
All
okay.
right.
So are you going to share your screen and
nope, there we go.
There we go.
All
nice.
Right. Yeah. So what are we talking about today? It is mastering your shop's financials, right? And one of my goals for today is kind of demystify the complications that everybody has around financials, right? We sometimes pull up P&Ls or balance sheets and it's talking in foreign language. It's 3 miles long. We don't know where to start. So our goal is to simplify this and let's say, hey, if I need to look at my financials once a month, I'm a busy shop owner. I got 5 minutes to look at it. And I need to answer a handful of questions. I want to be able to walk away from today and answer those questions. So what questions are we generally looking to answer? Well, let's start with just, hey, what is the most important report that I should be looking at on a regular recurring basis? How is my business performing? Is it performing to standard? How am I tracking my spending? Right? Do I need to have every vendor broken out? Do I need to analyze every little thing? Hey, I had some profit, but it's not in my bank account. Where's my money going? And then overall, is my business healthy? Or am I in a good spot? Am I in good shape? So our goal today is to figure out how to answer those 5 fairly simple questions, utilizing your financial statements. But I'm going to start with number one thing that we are looking at, and we should be looking at probably even on a daily basis. depending on the shop management system you're using, everybody's got their own flavor of it. We work with a lot of shops that run on Tekmetric. Their end-of-day report, it's great. It's got a litany of information, and the decisions that we make on a day-to-day basis are almost as important as the long-term decisions we're making. But the one report I should be looking at on a regular recurring basis, and I think it's most important, is indeed this end-of-day type of report, some type of monthly summary or daily summary of everything that happened in my shop. And what are we going to focus on inside of those? A lot of these great metrics that we have. Now, this is a whole year for a shop as an example, but it gives you some snapshots, right? We have total ROs, so that gives us our car count. So we could take a 2171 total RO count, divide that by 12, right? And we're touching about 200 cars a month, just a little under that. We have our average repair order, 564. I think Jimmy and I had a discussion, and we think Institute members have a much higher ARO number than that. One of the things I really like is how many hours did we sell? How many hours did we sell in the month? Because there's important metrics that we should be thinking about, right? What is my actual cost per labor hour sold? So I can price my labor correctly. That's super important. This end-of-day report or these summary reports give you those information right in a snapshot. What's my effective labor rate? How different is that from my door rate? What's my gross profit per hour? What are my sales per hour for operating my business and per hour sold? All these metrics are deep dives that you can get into to really move the needle. Another section we have here is a profit summary. We can load our shop management system. If we have good financials, we can come back to our shop management system and get really good data on a day-to-day, job-to-job basis. And what happens? Where can we make the most immediate impact? If we understand what our numbers should be while we're writing our new repair order. So we're going to look at things like, hey, what are my labor sales? What kind of discounts am I providing? What's my cost, my labor cost? Do I have the right cost in there? And again, we talked about that. Take your total labor for the year for your production team, technicians, and anybody else that's assisting in generating those labor hours. Divide it by those total hours sold. That should actually be your cost, not the $35, $40, $50 an hour you might be paying as a wage to that technician. Parts cost. Our number one one of the number one opportunities we find with shops is parts leakage. We're not tagging parts on repair orders. It's generally not even that the parts are stolen, broken, misused, comebacks, warranties. It's actually just we're making an administrative mistake of not tagging a part on a repair order. And not only do you eat the cost of the part, we lose the opportunity for that markup and margin that it comes with that part. Same thing with sublets. We might add a sublet on a ticket. If we don't make sure, hey, we knew that vehicle got towed in, we got to charge that client for that tow, including my markup. It's the same thing with missing parts on repair orders. And are those all happening at the right margins, right? I see on this example here, we're at a 46% parts gross profit margin. And that's going to be all the way on the right, the second line down, 46% gross profit on parts. I know I would not be happy as a shop, right? We're looking at 50, 55% as our goal rate. Well, that tells me I have real-time data that, hey, I'm going to tinker with my parts pricing matrix. I'm going to go in there and adjust some rates. And then I want to see those immediate results. If we wait for the financial statements to make some of these immediate impact decisions, we're leaving profit on the table for that entire month from the date you make the decision till the date you close your books. So a lot of times that could be a whole month of extra gross profit. Say it's 5% that you can make that difference, and you're doing $100,000 a month in parts sales, right? That's $5,000 that you're missing out on because we're not doing a daily analysis. And this is where we would want to spend our time to do these day-to-day analyses. This is kind of just a special shout out. This is a nuance that we see. We coach a lot of shops on using some functions within their shop management system. And for us, it is, hey, how do I handle these weird transactions where I might not just get paid by a credit card check, where it might be, hey, I do have an internal vehicle that I service, I wrote up an RO. How do I do it? Do I just not write up a repair order? Do I ignore some of the formalities of it? And we say, no, we want to see all that data tracked. And we do another payment type to move that onto the P&L in the appropriate spot. So we do track the appropriate costs. So we use these other payment items. Big coaching area that we do with new shops when they start working with us is we want to direct the items from your shop management system to the right home on the P&L. Super important. But now we want to ask and answer the question. We know the report we want to focus on, the shop management system. It's the lifeblood of the financial statements for your shop. We're pulling as much data as we can from your shop management system to do accounting for your shop because it is going to give us the most real-time accurate data possible. But now we got to answer the question, is my business even performing? How do I look at my actual P&L and my balance sheet and know that, hey, my business is operating in the way it should? We're looking at 5 numbers. We're going to keep it simple, right? Because we got to start somewhere. Let's keep it simple. We're going to look at 5 numbers. We're going to look at our total sales. We're going to look at our cost of goods sold. We're going to look at our gross profit. We're going to look at operating expenses, and we're going to look at net operating income. These are 5 numbers we want to track every single month to see if we're getting where we want to be. And there's a simple formula to that. We get a lot of questions around, hey, what should we be doing? And there's 2 ways you can answer this question. What does the industry do? And what do we want to do? The industry normally says, hey, if I'm running a loaded, which means I'm including things like benefits and payroll taxes onto my labor costs, probably service advisor up in cost of goods sold as well. I'm shooting for a global 50% gross profit, 30% in operating expenses, and 20% net income. Right. So those are 3 goal criteria. If I'm doing unloaded, meaning I'm only focusing on tech wages without attaching benefits or payroll taxes, then we're shooting for a 60% with 40% overhead and a 20% net income. Now, this is just a formula to get to a 20% net. Jimmy and I were talking about this earlier that, hey, what happens if I have a different goal, right? Maybe it's 40% or maybe it's just 10% and I want to have a modest living. Maybe I want to take a higher paycheck. How do we get there? What steps can we take to make this formula work the way we want it to work? One of the cool things is the Institute's developed a tool that we can actually back into the gross sales and all the various other input factors to get to this formula. Jimmy, did you want to jump in and go through that?
Yes, Eric, we do. We have a great calculator. I'd love to throw my screen up there so I can share with you this business calculator. And those of you who are here that are in the audience, if you want to volunteer your numbers, happy to put them in here for you. It could be your dream numbers. It could be your actual numbers. It could be, oh, these are the numbers of a friend. Oh, I have a friend who has this. So the idea here is, and we'll go through this, Eric, I was grabbing some numbers that you were saying in your little sheet that you were talking about.
Perfect.
But let's say, what's the salary that somebody wants to pull? What is your salary? Let's say it's $140,000.
Yeah. Well, first, most shops are going to be an S corporation. We're pulling $140,000 salary. We're going to have a talk about if that's the most tax efficient way to pay yourself.
Bingo. Yes.
And I think you guys had a guest on there that hit on that topic, but hey, let's control our reasonable comp and maximize profits as an S corp. Just had to do my tax plug only because that's the whole other side of the brain that we operate on.
Hey, and I love it. I love that you said that. So do we want to adjust this 140? Should we make it different?
Yep. Let's bring it down to even $80,000. And I'll just say there's never been an IRS court case that said anything under anything over $80,000 has not been a reasonable salary.
Yeah. And to replace an owner in a business to do everything that an owner does, it's probably going to cost $80,000 a year to do that. So that's a great number. And I love that. Net profit. What do we want to profit out of the business? What do we want the business to profit? $200,000?
I think $200,000 is fair. $280,000 It's pretty good take home, that from a,
Yeah. And on $1 million business, if they're doing $1 million a year, 200,000,
that's our 20%.
it's 20%. 3 weeks vacation, we'll keep that. We're a 5-day work week. Anybody want to change that? Let us know. Put it in the comments. By a 5-day work week, that means you're open for approximately 250 days per year. And then there's a couple of holidays to consider. Yes, those have to be taken out. Da, 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 da. Yeah, we got you. Service manager pay, 120,000. We can change this. What's a good service pay, Eric? What do you see out there in the industry? And comments. Anybody want to put in?
Yeah, I mean, usually we're trying to. Yeah, I'll let the comment. We'll give it another 5 seconds for somebody to put something in the comments, and then I'll give you my opinion.
Give me your opinion. They're not writing
4,
anything.
3, 2, 1. All right, we're going to go with what would be 10% of revenue, so $100,000, which should cover your service advisor and or service manager cost. If you have a full blown service manager and they're not writing service, maybe it might be a little more, but we'll go with that. Right.
All other operating fixed expenses, we're in the 350,000 range. This includes putting minus your salary, minus your service manager. So this is your rents and your utilities and your licenses and everything else.
Yeah, so that means we're going to include all that extra. 180,000 would be inside of our. That would all be inside of our overhead bucket. This is our overhead bucket. We talked about trying to achieve a 40% overhead bucket with all those included. So we might actually, that might only be another 220,000.
220?
Mm-hmm.
Happy. So total expenses were right around $600,000.
Yep.
Okay. Gross profit on your sheet that you were showing, you showed a 46%. So I just grabbed a hold of that and threw it in here at 46. In that scenario, in that shop that you were looking at, I know it's all fictitious numbers, but what was the car count? Do you remember as you were looking at that?
So let's see. We'll go with
daily car count.
Daily car count. And how many days were open? 250 divided by 52. We're open 4.8 days on average. You asked an accountant to come up with a number, right? I'm going to want a precise number here.
Come up with a number doesn't mean have your
36 days.
36 days.
Or 36 cars a day.
Okay. All right. So effective labor rate from your scenario that you were running, the font was a little bit small on my screen, so I couldn't see it. Yeah, but you talked about an effective labor rate. I did grab the average repair order, $584.
Perfect. We have that. And then our
how many techs is this 36 car count? You must have 6 techs.
Let's go with 6.
I was gonna say 6 or 7, yeah. Oh, but you could do it with 5. Oh my gosh, look at that. You could do it with 4. All right, but we'll keep it at 5. Tech productivity is at 71%. With that scenario, what did you have? Because 36 cars a day with 5 techs, you're looking at 6.5 cars per tech.
That's a lot of cars.
That's what I'm thinking. Comments. I need somebody to pipe up here. Andrew, Shayla, Tommy, Daniel, Chris, Bobby. 36 cars per day, 5 techs. Too much, too little?
Let's bring that down to
the 36.
Let's do the car count. Let's bring it down. Yeah, let's bring that down to 9.
9 total?
9 per day.
9 per day. All right.
If I do 9 times 250, gets me my 2250 of cars for a year. That sounds a little bit closer. Our effective labor rate was 124.15. Or 124.
Current RO.
ARO.
Average hours. Okay. Number of techs. We've got 5 techs.
Yeah. And I think we're going to bring that number even down to probably 3 if we're doing 9 cars a day.
Okay. 71% productivity. I'm most shops that I'm talking to, we discover that they are somewhere between the 50 and 60 range. For this exercise, we'll keep it at 71, and then we'll show you some really cool things that we can change here. Thank you to Daniel, Shayla, Chris. They said too little text or too many cars. Yeah, and I agree. So I'm glad we changed that. What's your highest paid technician hourly rate?
50.
I'd love to hear that in the comments, but I know that you work with a lot of shops, Eric.
Yep.
What's the hourly rate? And
Yeah. Before loading and adjusting for productivity, $50 an hour seems about right.
okay, cool. We'll keep that right there then. And we'll also keep our parts labor, and we'll keep this right there where it is at 48.
Perfect.
So what we're saying is, if you want to do this and you want to be selling in this range, you can do what you're doing with 3.3 technicians. So either you need to increase the productivity a little bit, or you need to increase your profit margin just a little bit. So if we let's play with a couple of numbers here really quickly, because you were talking about getting to a 58, even a 60. Totally
Yep.
agree with that. If we adjust this just to a 52, notice here that you don't need an additional technician. You're able to do everything in-house just by adjusting the profit margin, adjusting your parts markup, your parts matrix. You're able to
Yep.
hit all these numbers.
Absolutely. And that's
I love
very
it.
simple.
I
This
love
is
it.
very achievable.
Yeah, just like you were talking about that $5,000 that you're missing out on. One simple, slight little adjustment. Okay, let's look at a couple of other things here too. What if we were to, and this is something that we talk about at the Institute, and I'm going to use the average. So we have two averages. Which one should I use? In our advisor group, our APG, the average of average repair order in our APG group, in our advisors group, the average repair order is $1,100. Within our coaching and our group member groups, it's anywhere from $850 to $950. So let's go conservative. We'll go with the $850 range. So anybody that comes in with the Institute, you should be operating at this level. That's the average of what is operating at the Institute right now. $850, phenomenal. Look at that.
Absolutely.
It brought down the number of technicians even a little bit more. Now, what else should we adjust? Oh, let's adjust the productivity. Let's make our technicians a little bit more productive. 80% productive? What do you think, Eric?
I think that's reasonable.
Oh, it's totally reasonable. Look at that. Look at that. Brought down the number of additional technicians that we'll need.
We're down to 2.6. We got to find a way to get a 0.6 technician.
So here's what's interesting, Eric. By being only 80% effective, we're still losing $101,000 per year.
That is a whole lot more money than anything that I can find in the operating expenses on this P&L, right? We have 220,000 of other expenses.
Yeah.
Or we can focus on driving productivity and find $101,000.
101. So let's adjust this to, a 90% efficient productivity. Look at that. We just picked up $55,000.
Huge.
Now this will blow your mind here. When Cecil owned his 3 shops, when he was managing the shop in Mountain View, California, his technicians were operating over 100%. They were over 120%. In fact, I think it was 121. So let's just look at. So the reason I say that is 100% efficient is possible.
Absolutely.
So let's look first at 100% efficient. You could totally even lose a technician and be just fine. All right, let's operate at the 115. You just picked up another $52,000.
Oh! We just found $150,000 just by moving one needle.
Just our technician proficiency. So our technicians need training. Our technicians need to know what they're doing. We need to look at our shop process procedures in-house. I've seen shops where the filters are way over on the other side of the building and your quick lube bay is way over on this side of the building. The tech has to go back and forth. Dude's walking 5 miles a day.
Absolutely.
No, let's bring it all over. So look at your in-house.
Yeah. I mean, think about, right, what is everybody's number one fear right now? Where am I going to find my next technician? How am I going to develop my next technician?
Yeah.
Look at
Yeah.
everything that technician has to do, and can that be done by somebody else in the shop too? At what point in time do I not need a technician to perform a function that they're performing?
Oh yeah.
Now, save for some efficiency things, right? There might be things like when they're compiling an estimates and you need a part list, and
Yeah.
they're the ones actually on the physical card. Can a service advisor use a standard guide and compile that? Sure. But that's probably a fine line. But is there anything else? Moving cars, right? It's the reason why dealers use porters. Um,
Yep.
in another life, I wrote service. Now, we were spoiled. This was during the both during the unintended acceleration problem for Toyota and their Tacoma Tundra frame rot issues. But we had technicians that were at over 200% productivity because we streamlined as many processes as we could.
Wow.
Yep.
That's a lot of porters running stuff around. So the technician is more productive. I love that. You know what? That reminds me of a story I want to tell you about a shop that came to the Institute and said, hey, look, we've been to a few different training companies, and every single one of them seemed to hit on these three things. And if you look at your car count, increase your car count, increase your average repair order, spend more in marketing.
Yeah.
And the shop came to us and said, look, if that's your jam, that's cool, but that's not our jam. That's not what we want. That's not what we need. We
Exactly.
need shop efficiency. We need to be more productive in our shop. So don't talk about these. We've got a solid average repair order. It was $650. We got a solid car count. We've got a solid marketing plan. I need shop efficiencies. Great. Love it. You're in the program. So he comes in, a family business. The success or failure of the family depends on this business. It cannot fail.
Yeah.
That's some pressure, right?
Absolutely.
He comes in, he and his sister, and they're working the system. They're being coached and trained. Within 9 months, they go from a 7% net profit. Did I tell you the 7% net profit part?
Yep.
7% net profit. They couldn't break that. He's like, I just can't break it. What can we do? Within 9 months, got to an 18% net profit.
Wow.
Boom, boom, right? The natural progression of him coming into our coaching and training program is to progress them into the GPG group. It's to a group environment, a mastermind. This is where you have a composite partner that keeps you accountable. So he moves into the group environment, goes to these meetings and goes and visits a shop, and they come away with an action list for that shop owner, 200 different things that you need to do on your shop, Eric, to make it a better, more attractive for the consumer, for the public to come in and purchase from you. Love it. Love it. Love it. Love it.
And another shout out to that group environment. We as a firm, one of the best things we ever did was join an association that has, we call them financial review groups. It's very simple.
This is your mastermind groups. These are your 20 groups.
We have our 20 groups as well. So, and one of the best things we do is we go out, we meet, we spend a few days together. We come away with our long list of to-dos that our COO hates when we come back with that list, but it's what moves us forward, right? It's one of those things that, hey, what is working for your shop that's not working for mine? We're all doing right things and wrong things, and when we can complement them with one another, that's how we all move forward together.
Oh, I love it. I love it. I love it. I love that you're in a mastermind group for CPAs. That has to be the most riveting meeting you go to. That was sarcasm. I was being sarcastic. Sorry.
Ironically, as a group of CPAs, we focus so much less on numbers and everything else because we're all good with our numbers.
Good.
It's
Okay, good.
everything else that's challenging.
Oh, it is a good meeting. So let's get to the end of the story here, because this is where I want to tell you that group environment that you speak so highly of, that we tout as great. This is where we want you to move into, because this is where you have that peer-to-peer accountability. This is where you really, really, really move the needle. You already heard, we moved the needle, 7% to an 18% net profit.
Yep.
Solid.
That's a life-changing event.
It really is. Now, 9 months in the program, now they move to the group environment. Now they've been in the program now about roughly a year and a few months. Let's call it a year and a half. Record months, 24.9% net
Wow.
profit.
Huge. Well, and that's better than we saw those industry averages, right? That I put up under the formula, 20, that's above it. And what
It's
is it?
above it. It's
And
above it.
a year
And
and
this is
change.
somebody that came into the program a year and a half ago.
Wow.
Let's see. This, I got to think now. This September? Ooh, I think it's this September. It'll be 2 years that this person has now been in the program. This family, I'm going to call it a family because it's not just him. It's her as well, a brother and sister and family. They have nephews, nieces, sons, daughters that are all working in this business, plus the additional family that you adopt because you choose to bring them into the family. They are part of the ship. They're part of the machine. They're part of what makes us awesome and amazing and takes us out to that next level. So a big, huge shout out to this shop. And he's a very dear friend. And I don't know, I'm not going to name him in this environment, but if you want to know, come to me privately and we can talk about it.
Awesome. Awesome. I hate after all that excitement, I hate to drive us back to a PowerPoint, but there are a few things that we still want to drive home here.
Well, let's do it. Let's drive it home because even though this is the PowerPoint, even though this is the numbers, this is where we want to put our focus and attention so
Absolutely.
that as a shop owner, we know, okay, do I have money in my pocket? Well, that's the wrong way to look at this. We got to look at the long term.
Absolutely.
Yeah. More
So,
than
so
just
now,
money in your pocket.
absolutely. We have the formula. So whether or not we choose one of these industry standards or we actually go through that exercise, we come up with our numbers, right? That calculator is going to give us what we need to hit for gross profit percentage, what we need to hit for operating expenses to achieve the net income, the lifestyle, the business infrastructure that we want. So we come up with those three numbers. And we're just going to every month, what's our goal? Hey, are we hitting our goal? We have our revenue number based on that target that we had. Were we above or below it? Are our cost of goods sold where we need it to be to hit that number? Right. So in this case, this is just pulled right off of a QuickBooks P&L, just snapshots of it. Now, one downside with QuickBooks Online, they won't do nice things like, hey, I'm going to calculate my parts costs off my parts sales to see how that corresponds back to my goal for parts margin. But we're going to look at that gross profit amount, right? Is that 60, in this case, 64% gross profit? We're pretty happy with that number. How are we doing as a whole? You could just take a little Excel sheet and just drop those few numbers in there, right? And we're talking, again, 5 numbers. That's it. What are our parts sales? What are our tire sales? What are our labor sales? What are our sublet sales, shop supply sales? And I know those, unfortunately, for those in California, you can't participate in that program. But we have parts costs, we have tire costs, we have labor costs, and we have our sublet costs and shop supply costs. What are our gross profits and what do they aggregate to? So when we say that 65% was at 55% under that 60% goal, which category do we need to work on? Right? Maybe it's our parts sales. We go back to the parts pricing matrix. If it's labor, we go back to our efficiency, all the things we talked about with labor efficiency, right? That was moving the needle more than anything, right? Even more than a parts pricing matrix or whatever other costs we can carve off the business. Maybe we're missing out on some sublet markup. Maybe we're missing out on some shop supply sales. Now, again, this from a gross profit standpoint, I'm pretty happy with how this P&L shook out. What are the other items we're looking at? What's our total expenses? Remember, we talked about 40%. And that's going to include all those overhead items, also include the owner's salary, also include my service manager's salary to hit that 40%. And that's how we end up with a 24% net income percentage. Huge. And it's simple, right? Those are our formulas. At least from the analyzing the number standpoint, it's simple. The complication is going out in execution. How do we drive those labor efficiencies, right? We wouldn't be able to hit this 24% without having our labor gross profit at 76%, without hitting our parts sales at 53%. We have to focus on our parts pricing matrices, our labor efficiency, bringing the right cars in the door with the right ARO, the right gross profit percentages. And here's a breakdown of some of their largest overhead items with inside of that 40%. There's 3 items that we probably might want to spot check inside of our overhead operating expense account. It's usually going to be your 3 biggest items, right? Because that's we can go through and we can beat up our uniform vendor, we can beat up our insurance provider, we can beat up our accountant and CPA to help reduce some costs. Probably those are representing a fraction of a percent of your total P&L. We need to focus on these big, heavy hitting items, right? What's our rent and marketing? Are we, do we have enough? And that's the truth teller, right? Is do we have enough cars coming in the door to justify our spend on our space and bringing those cars in the door? That tells us when we have a revenue problem more so than a cost control problem. We need to if we have 4 walls that cost us X, we don't really have an option to move the shop. So that's when we know we need to drive more revenue. Is our service manager percentage, is that in line, right? Are we too heavy on the front end of things? And then, hey, in this case, they're just taking the most comp out of this deal. So their 3 top overhead expenses representing half of their overhead load is what they pay their service advisors, what it costs for their 4 walls to bring the cars in, and to compensate themselves to hit their financial goal that they have. So high level, we talked about just a few numbers. Sales, did we hit our sales goal? Did we hit our cost of goods goal? Absolutely. Our total cost of goods sold was 36%. Our goal was 40%. We were under by 4%. Our operating expenses, our goal was 40%. We hit 40%. We're right on target. Our net income, our goal percentage for that was 20%. We hit 24%. All these just pulled right off the QuickBooks P&L. Super simple. I would keep a spreadsheet with those 5 metrics. What's my goal? What's my actual? And what's my result? Now, a lot of times people ask, hey, what about where I'm spending other parts of my money? How do I control costs? How do I not let that creep out and get out of hand? How do I not let my overhead costs get out of control? Now you can analyze and you can look at what you pay your vendors every month and really deep dive and spend the time on that. In my opinion, time is better spent in actually setting a budget, what I'm willing to spend in those categories to hit that 40%, right? The more we plan, the more we can prevent outrunning things, running into issues. We're going to actually create a budget and say, this is what we're going to spend. And now it's our job to hold ourselves accountable every month to look at it. So I might look at a budget to actual. Right. This is the first layer of, hey, I'm going to deep dive in my financial process. But creating a budget really should be the first avenue you want to go if you need to find a way to control costs. Because if you set a plan and you hold yourself accountable to it, that's what is going to prevent you from overspending and move the needle. So that's something I might look at is what's my actual to budget. You can build that out in QuickBooks Online. You have to have the upside subscription for it, the expensive one. Or you can just export 12 months of P&L to Excel and then change your numbers, what you want them to be, and drop in the other one. We have templates for that. We do that all the time with our clients. And we actually even service some shops in what's called a fractional CFO seat we'd actually help you come up with this plan in depth, create that roadmap, and then hold you accountable on a biweekly basis for that. Another question that we have that we answer is, I had profits. Now where's the money? I hear the term cash flow statement thrown out a lot. Now QuickBooks has got a function for a cash flow statement. That statement comes through in a way in which only those who had to spend 4 years going to school, actually 5 to be a CPA and go take all these egregious exams to understand, where it talks about investing cash flows, debt service cash flows, all these different items. And in reality, for us on a day-to-day, month-to-month basis, it's not practical to look at that and interpret it and be educated to the point where we need to understand that particular report. And I don't think it's going to answer the questions that we want to answer. Let's do it even in an even more simple way. We're going to run this balance sheet report. So at the end of the month, into the prior year, and we're going to display columns by year. That's the important part when we do that. And what this will return us is a balance sheet that shows us the prior year balances. So what's in our bank? What do we have for fixed assets? What do we have for other assets? What do we have for liabilities and equity? And it'll show it where that sits in the current month. And we'll just follow this along, right? Hey, we're up 50 plus grand in cash. Our total assets are up. So we know we're actually holding on to some of our profits. Looks like we acquired some more short-term liabilities, but we paid down some long-term debt, but we're up actually a little bit altogether from a liability standpoint. And then, hey, we maybe took a lot of money out of the business. So some of the money we're accumulating as assets, and some of it we're taking out of the business. And you can actually foot the change in all these balances back to that net income number to exactly know where all your cash flow went from your net income. So when I don't know where the money went from my P&L, I made $100,000, but where did it go? It's not in my bank account. Follow the balance sheet, see where those accounts all moved line by line, and that'll tell you exactly where the money went. And usually we see that in the shareholder distributions account. Hey, we pulled that money out of the business. And then final question, hey, is my business even healthy? Here we're going to focus on this equity number, right? Now this shop was actually highly profitable, and it's a new thing. And you'll see their balance sheet's not super healthy. All right. We have more debt than we have assets. So we have negative equity. What we want to do is over a long period of time, over trends, years and years and years, we want to see the equity section actually continue to grow, continue to accumulate, versus going negative. The good news for this shop, right? We went from a negative 260 equity to start the year, and through the first quarter, we actually chipped away at that. So we're improving the health of this business little by little, month after month. Super important basic balance sheet item to look at. Slideshow is all done. This is our contact information if you did want to get in touch with us. Jimmy, do we want to open up the Q&A, or we want to do a little other experiment about deep diving?
Well, I like the deep diving. If anybody's got any questions, comments, concerns, type them into the comment section, and let's dig into it. If not, pull up because you've got a. How often is it that this report goes out to your clients when you're working with them? Is this a monthly, or is this an annual or quarterly?
Yeah, so this is a tool that we use when we hold something called a strategy session. So we can provide reports all we want. We try to make them as informative as possible, but we want to actually sit down and talk to you about it. So something that we might bring up in your strategy session, can everybody, am I sharing the right thing? Nice little graphical Excel workbook.
There you go.
This is just a tool that we use if we want to do some more deep diving, and if we want to answer some questions of like, how do we become more efficient? What goals do we need to set? Where do we need to be? So this will help us analyze trends. So like our average repair order from a period to period to period. Hey, is this seeming consistent? What happened in September and November that it's so much higher than say in January, February? I think we can answer those questions, right? Those are maybe some seasonal aspects to our business. So this really gives us some tools to talk about different things, and let's look at the total view. This is kind of spreadsheet. This is my language. The graph is more everybody else's language. But yeah, we're looking at, hey, what's my average repair order? What are my gross profit percentages? Labor gross profit, parts gross profit. What's my overhead rate? And then what did my net end up being? And then we want to look at maybe even some other items that help us understand, hey, what does our car count? How do we back into those gross sales numbers? How do we know if we're pricing things effectively? How much overhead do we have per car? Every car that comes through the shop, how much does it cost us to just have that car come into our building? How much per labor hour sold? What's our labor cost per hour? What's our revenue per hour? I think some of these numbers might have gotten jumbled here. I hope our labor cost per hour is not $158 an hour. That'd be hard to manage. But what's our revenue per billed hour? What's our gross profit per billed hour? What's our net income per billed hour? So this is how you can know if you're making money on a car to car basis, is when you drill down into some of these metrics like that.
Yeah. And that's something that needs to be drilled down, not just annually, because you can't correct the ship if you're only doing it annually. You can't do it quarterly. You can't do it monthly. This is a daily analysis of those daily numbers. So those 5 numbers that you were talking about on the daily, man, they're so valuable because it really does give you the indication if you are going negative, further in debt, or if you're on the positive rise, if you're increasing and making money.
Yeah. I mean, even like our effective labor rate variance, right? That's a daily thing. I'm be looking at how off what's our bound, right? And usually we say around 10% is our bound of how often can I vary from my, what my street labor rate is, right? We set that labor rate to make a goal gross profit. If I don't keep that under control on a regular recurring basis, that's how money walks out the door. We're never going to get our efficiency number that we're hoping for if we're not doing that.
Yeah. Got to be careful. Thank you for sharing your spreadsheet there. That's awesome.
Yeah.
Hey, go ahead. Sorry.
Oh yeah. If somebody wants this tool to use to tinker with themselves, happy to share it. Here's my, I guess I can pop back to my contact info.
Yep.
Awesome. Reach out. Happy to share it with you. If you want to jump on a call, run through an exercise. Anybody in the Institute family is also part of my family, so I'm happy to provide that to any member. I don't sell anything. I'm a partner here at the firm. I'm not one of our salespeople, but I'd be happy to walk through that with you without any pressure of coming to work with us.
Nice. Thank you for that offer, Eric. That's very cool. So anybody that goes to Kaizen that's scanning this QR code, make sure you mention that you saw them on a webinar with the Institute.
Yeah.
That way you get the Institute experience there with them. So thank you very much for doing that. And is this also an email that'll get to you, Eric?
Absolutely. Yeah. So it's a shared inbox, but I'll see them come through, and I've instructed my team to route anybody requesting this directly to me.
Beautiful. Beautiful. Thank you for all you're sharing with us today, Eric. Really appreciate that.
Yeah, my pleasure. It was a good spirited conversation. We didn't get too far into the deep dive into spreadsheets, and hopefully everybody was able to follow along because we didn't get too far into the number crunching.
Yeah. But we got in there, and this is good. And this is what we do with our vendors in the industry is we lock arms, and together we make a difference. Then for the Institute, thank you for the Institute for sponsoring this webinar. They have a phenomenal advisor program, manager program, coaching one-on-one, even group environments. So if this information you're finding valuable and you would like to join the Institute, we'd love to work with you. Go to our website, wearetheinstitute.com, book a business review, book a business analysis so that we can look at your business. We're here to listen. We will not judge. We're here to listen, and we'll take those next steps with you so that you can be a profitable business as well. It's a total different set of skills, right, Eric? It's a different muscle set compared to being a technician working on a car. Now we have to work on the business.
It's the hardest leap to make for a business owner in general. Absolutely.
So true. So true. Thank you, Eric. Really appreciate it, brother.
Thank you, guys.
We'll talk to you again soon. See you guys next week.